Good afternoon, guys. This is Juan Grimaldo here with Wendy Patton. She's back, and I'm super excited because today we're going to talk about subject twos. Hi, Wendy.
Hi.
Thank you for coming.
Hey, yeah, thank you. Part two. We'll call it part two.
Let's do it. This
will be exciting. So we were just talking, Juan, about sub twos and what they are. But first, let me define what a subject two is. So a subject two is when you get the title to a property, someone deeds you their home.
Okay.
But it's subject to the underlying mortgage. So, let's say Juan owns a home, he has a mortgage, and he wants to sell it, and I like his mortgage terms. I just say, Juan, sign this deed, and I'll give you whatever I'm going to give him. It might be money out, it might not be, it might be nothing out, because maybe he just wants to get rid of it. It just kind of, sometimes he'll pay me, okay? If he owes too much, then he might pay me to get rid of it off his back, okay? Especially when times are tough.
Interesting.
Okay. Now, so why are subject twos so important right now? Because there are many years worth of mortgages that were 2 and 3%. Okay. That's why it's key. Many years, right? So anybody who has a house that they have one of those mortgages on and they don't need to cash out that mortgage or are willing to just leave it be, you can take it. So here's the thing though, right? So you deed me the house, now I own it. Now, if you have a lot of equity, which you might, you may need it all out, or you may only need a portion of it out. That's all negotiable. Every real estate transaction and real estate investing is negotiable. So Juan and I are going to decide what does he need out or what doesn't he, and I'm going to find that out from questions. If he already bought his new home and he didn't sell the old one, I know he might want his cash out, but he might not need it out. So two different things, right? Looking at that. And if you want more details, I do have that book. It's on Amazon.
What is it called?
It's Investing in Real Estate with Lease Options and Subject Twos. Now, I published it in 2005, and I just republished it last year again.
Awesome.
With all the new updated stuff, because, not the newspaper anymore, there's online, that kind of thing.
Right.
But, so it's been updated. So check it out. Make sure it's got that little red thing on this as a bonus thing in there. Anyway, it'll describe a lot more and a lot of how to really calculate these things and how to negotiate and scripts to talk to sellers and stuff like that. Okay. And lease options as well. So when you are, here's the biggest issue that people are concerned with doing a subject to is that they feel that the note or the mortgage could be called due. And it could be. It is a possibility. It's rare, but it's possible. And if you follow a few simple steps, it can make it easier.
Okay.
Okay. So, in a nutshell, first of all, never, ever, ever commit mortgage fraud. It's a felony, and you never want to lie to the mortgage company. So I never tell a lie. I just don't always tell the whole truth. Got it?
That's different, yeah.
Yeah, because especially being a licensed broker and title agent and builder, I would lose all my licenses if I had any kind of fraud like with that, right? So what I would typically do is say, okay, I work with Juan. He wants to get rid of this house, and it's got a great mortgage on it. Maybe it's 3%, great payment, half of what it is right now, right, or whatever. So it's a big deal. Definitely. I mean, it's a really big deal. And then I want to tell you one more thing. Don't let me forget to tell you. This is really important thing about subject twos. And I wish I had a chart or something, but I'm going to tell you guys a little thing to look up because it makes it even more valuable.
Can we share the chart?
Yeah. Can I give it to you later?
Yeah. And then we'll put it here. We'll put a link so you guys can download it.
I'll explain it later. So I'm negotiating with Juan. Here's the thing. I'm going to have a letter drafted that basically says Juan is moving his property to an LLC. But he's going to sign it. I'm going to draft it for him. Hi, Bank of America or whatever. I, Juan Grimaldo, am moving my property into 123 XYZ Street LLC or whatever it is. Okay. That's true. Okay. He didn't say his LLC. He said into
an LLC.
An LLC. Got
there
it?
You go.
Very key. Okay. That's key right there. And then I will update my insurance and just wanted to make sure everyone knew, blah, 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 whatever. Okay. I have the words in my book better. Okay. And then you sign it. We mail that into the mortgage company. Okay. So they have notice now. Now that's one reason, and it's not even bad to do it certified, but I don't want to make it look too weird or official or something, so I just
Don't want to give them too
send
many
it in.
clues.
But I'll document that that's when I sent it in, okay? And that they did nothing with you, okay? So then we're getting ready to close. A couple other things have to happen. Juan gives me access to his mortgage, okay? Meaning as a full authorized person on your mortgage information. So I can call the bank. I can talk to them about, is everything on time? Is it current? Here's where the new LLC mailing address will be. Oh, and that could be in that letter too. And the address for the LLC will be blah, 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 blah. Okay?
Perfect.
Okay.
So is it pretty easy to have them give you permission to have access
No,
to?
there's no permission. I'm just telling them we're moving it.
Okay.
They'll never give
I'm
you
asking
permission.
about for
Oh, yes.
me,
Oh,
my
yes.
mortgage
Yeah.
company.
Oh, easy peasy. So basically, you're going to, now there's some basic forms you can have filled out that you give to them, like a limited power of attorney and stuff like that. But it's easier if Juan just calls Bank of America, for instance, and says, what do I need to do to
Make you an
make
authorized
my friend or whatever an authorized user on my account, or not user, but authorized to talk to you about my mortgage.
Gotcha. Okay.
And they'll give you the form, and then you fill it out and you get it to them. I'll keep a copy just so I have a copy for my records to prove later if they say, well, you're not authorized to talk to us, whatever, because you want to talk to them this is before closing, okay? So now before closing, I'm checking with the lender to make sure he's current or whatever he told me. If he's behind 2 payments, maybe that's one thing I'm doing for him. Maybe he's behind 2 payments. He doesn't want
Catching
to
it
lose
up.
it in foreclosure. I'd be catching it up at closing. Not before closing.
Oh, yeah.
At closing. The title
That's
company
important.
does this for me.
Yep.
Okay.
So when you do these things, for example, when you are starting the process, if there's no difference, I mean, whatever you agree to, that's basically it.
That's right.
And
So-
the payments are made through title directly to the bank, or do you make the payment?
I make the payments. I
Okay.
have them come right out of my checking account or whatever, okay?
So you're basically the new owner, and you're sending that payment straight in with your
Yep. I'm
LLC,
sending it in just
a
like
check.
normal. And I have, because I'm authorized to do everything on behalf. And there's like wording in my book that can kind of help you with this. But it tells like everything that you need access to. Like I need to know the balance. I need to be able to change the address. I need to be able to, find out the status of the mortgage. I need to be able to ask for a payoff request. All of those things, okay?
Wow.
So so this is all happening prior to closing. Then at the closing table, any shortage gets mailed or wired. Okay. Now, your title company, if they don't do it, you need a different title company, or you need to explain to them what's really going on because they may not understand it.
Gotcha.
Okay. Or I can
Yeah,
help
because
you with
that's
your
one of
title
the.
company.
I got some pushback
Okay.
when I was talking about those.
So it is totally legit for them, but some title companies don't like it because they feel like, well, there's this mortgage out there and you don't have permission. Well, it's an exception to the title policy. So they're only insuring everything else. I don't care about the mortgage on here. I just want you to insure the policy, everything else on this property except that mortgage. Okay, so that's what the policy will come to you with. So then they do all the closing, they wire the money if there's shortage, blah, blah, blah. But you also, here's the other big step that people miss, and this is how they sometimes have a problem with the bank. Once you notified them you're going to change it.
Right.
Well, at the closing is when you actually really change it, when it gets deeded from Joe Blow or Juan to the LLC, and then it gets recorded. That insurance has to match that. So Juan's gonna cancel his insurance because he can't just change the ownership of the insurance policy. It can't be changed like that. So he's canceling that one. I'm creating a new one
With LLC.
with the LLC, but here's where the key is. You've got to name Juan as additional insured. They need to be able to see that Juan's name
still there,
matches
be part
that
of that.
mortgage. Even though additional insured doesn't give him any rights to any money if it was burned down. It only helps him if someone slips and falls. It's a liability insurance for him, right? So he's additional insured, so the bank can match that. And then your new address, and then you need to name the mortgage company exactly like Juan did before on there as the mortgage holder. Then they get this new mortgage policy. They've already been kind of notified of this LLC thing, and now they see this. That works like 99.99% of the time.
So in essence, let's say
But you got to do it all right. Yeah.
Right. Let's say there is a claim. You're going to be the one receiving that
'cause I'm the
your
owner.
address, and it might be
Owner.
the name. Got it. Okay.
Only the owner gets paid, like if there's a claim or if there's a fire or anything like that. Yeah.
See, this is where we talk about learning, guys. This is key, and it's so simple. Like, I honestly have heard of subject twos.
Yeah.
I'm not gonna say I knew about them because I don't want to say no, because I don't. And
Yeah.
you just explain it in a way that it makes total sense. And Why aren't we doing any more of these?
So this is what's really cool. You are being in the real estate world, especially as an agent who does a lot of volume. You guys have a lot going on. You are going to run across sellers that have these situations.
Yes.
They have great mortgages. Maybe they don't have a lot of equity. Or even if they do have some equity, they may not need it all.
Right.
It's all negotiable. You know, maybe you have $100,000 of equity and I give you 20 grand and the other 80 just sits there until I sell it. Or sits there at a small percentage, or it's all.
Or they
negotiable.
can even finance it. There's so many ways you can put deals together, right? And let's say they have a $80,000 equity and they don't want to get the full amount. You can have them do a note on that second, maybe be a second lien. Is that possible
You could,
or not?
but I mean, I've never asked anyone to do that. I give them a note. Oh yeah, I give them a note.
Right.
Yes, from my LLC to Juan would be a second mortgage on there. Yes, you could do that.
Yeah.
Yes,
Awesome.
yes. That way he's protected. That way, if I got hit by a bus tomorrow and that house gets sold, his interest is
You get that
insured.
portion.
Yes.
Yes.
Yes. Sorry, I misunderstood that.
No,
but it's
you're good.
really important that all those little steps happen in there. But here's the thing. When I talk about those amortization schedules. So okay, guys, I've been investing almost 40 years, right? And I just found this out. When I redid my book and I did a presentation, this is like last year. Okay, I did a presentation to my real estate investors group, and as I was putting together the amortization charts to show 2%, 3%, 5%, 9% interest, I found the weirdest thing. I never knew this, and very few investors know this.
Okay.
Very few. I guarantee you, there's very few, but it's so key. So when you look at a 2.5% amortization schedule, which there's a ton of those out there, compared to like a 7 or even a 10, okay?
I know where you're going.
You do?
Yes.
Tell me.
No, keep going.
Oh,
The difference,
is.
astronomical.
But here's the thing. I always thought that the mortgage payment, of course, it's going to be higher with a higher rate, right? Higher rate, a higher payment. Of course it is. But what I didn't know is that the amortization schedule would actually be different on the principal paid. So when you have a 2.5% mortgage, more goes toward the principal every month in the beginning years than a 7 or 10%. Way more. Like 50% almost from day one. If you have a low interest rate mortgage, goes toward the principal.
That's insane.
Whereas when I'm not just talking percentage wise, I'm talking dollars too. So I'm gonna send you this chart where I show the differences of each one, and it is so incredible. It was. I thought, well, something's wrong. I kept looking. I'm like, that's not possible. It's a 30-year mortgage. I mean, if I'm mortgaging 175, whether it's 2 or 7%, the amount going toward the principal each month should be exactly the same. It's not. There's some kind of mathematical weird phenomenon with the amortization schedules where it's reversed. So years ago, when I first bought my first home at 10%, everyone said, you don't start paying on the principal till much later. It's all front and loaded. That's true. Except when you get to 2.5%, 3%.
Really?
So not only is your cash flow better because that payment is so much lower. So that's number one. 2 is that the amount you are paying, way more of it goes toward the principal than on a high interest rate loan. And it is bizarre. It's something's weird. It's the opposite. So when you have 2.5%, it's front loaded with principal and back loaded with interest.
Really? That I didn't know. So,
No one does, hardly.
And what do they say about the, Einstein said this about the compound interest? The eighth wonder of the world. But it works when you're renting properties, it works backwards. Now, when you're paying it,
It's crazy. So that what that does for you is not only does it give you more cash flow with those, that's why I said go after those. This is big time, guys. Big time. Okay. But remember, I'm winding down my inventory. I'm doing more lending and investing in syndications and stuff like that than I am buying and flipping properties anymore. Although I do some, but not a ton, right?
right.
But with that interest, that would be exactly what I'd go after right now. I would go after those big time. Any of those I could get, because let's say you're making $500 a month cash flow, if it's a lower interest rate than if it is higher interest rate, which is very possible, 500 to 1,000 probably on market here, right?
Yep.
Big difference, a big difference. So that alone is huge.
It's
but
huge.
Then the amount that you are paying, more of it is going towards buying down building the equity than on a higher rate too. Much more. I can't wait till you see those numbers. I can't even explain it. is the bizarrest thing. And I think some people even look at it and they go, oh, I didn't, but when you start to know amortization schedules, like, we always look at like, what is it? But usually you just look at like, okay, I'm going to pay 7%. This is what it is. But what you don't usually look at is I'm going to compare 7% to 5 and look at every month how much is going to each one. I thought it was the same.
Awareness is everything, right? It's huge.
How did I not know that?
And again, 40 years into
I wrote
the
a book
business,
in 2005 on that.
right? We got to get the book. What's the name of the book again?
Investing in Real Estate with Lease Options and Subject Tos.
Okay, by Wendy.
Patton.
All right, let's go. Thank you again, Wendy, for your time.
You got
This
it.
is great. This is amazing information, guys. Thank you. Tune in for more. We're going to have her back again here soon. So don't miss it.